of at least 1,500 jobs. Now, they say new taxes imposed by the Affordable Care Act makes expansion impossible. Joining me now is the chairman of the board for Cook Medical, Steve Ferguson. Good morning to you, Mr. Ferguson. So, as chairman of the company, you manufacture medical devices. Tell me what this tax from Obamacare, I believe it's a 2.3% tax on the U.S. sale of medical devices beginning in 2013. What is that doing to your business here in the United States?
Well, we manufacture about 15,000 different devices. 80% of them are manufactured in the United States, while 57% of our sales are overseas. The tax is a gross tax on total revenue. And so when you drop that from 2.3 on your gross revenue to your bottom line, it amounts to about an additional 10% equivalent. So if you add it up, you have the federal tax rate of 35%, you add a new 10%, and of course the states impose corporate taxes too. Indiana happens to be 8.6, North Carolina 6, something. So you begin to get your tax rates above 50% in this country with this new tax.
Mm-hmm. So you are scrapping plans for expansion as a result of this?
Well, since this cost drops to the bottom line, it's about equivalent of each of the plants that we were planning on building over the next 5 years in primarily Midwestern rural cities. We just did one in Canton, Illinois, which we're very pleased with. It was on the site of the old International Harvester, so it was sort of a brownfield site, sort of the rise of the Phoenix, bringing back to Canton a new life. And so we were thinking that we would do plants in communities like that across the Midwest.
So the argument for this tax, if you're a proponent of the Affordable Care Act, is that it was going to raise millions of dollars, this tax money, to help pay for this new health care initiative.